takes a moment here. Wow, 20, 23, 24 people just jumped in. 2 seconds. That's insane. I love it. You guys are waiting. All right. So we are live on, let's see, Facebook, YouTube, Twitch, Kick, and X ×2. So we got a pretty good external audience as well. So if I ever start talking about stuff you guys here in the Discord don't understand, it's just because I'm talking to other people that aren't in the room with us. So I'm not like neurologically damaged in that way. So obviously the big news for the morning is going to be GLTO. So there's a couple items here that I was watching. I did trade this one earlier in the free chat. Kind of just walk through what I did with this one. I just kind of I'll walk through it really fast for you guys as well. It is pre-market. We do have some good volume this morning, which is a rare treat in this kind of market. You know, and the key differentiator here is that I see volume that is greater than 1-to-1 in comparison to market cap on multiple stocks. Okay, and that is always the telltale sign for me about whether or not the stock market is going to be kind of behaving well, or if it's going to be kind of inconsistent with the volume. So yesterday we had sparse volume. Today we have pretty strong volume. The only one I don't really like right now is TMQ. I like the direction of it. I like the strength, but I don't like the volume to market cap ratio. And there's a very specific reason for that. So I'll get into all that later on. But just know that that is the #1 factor that I look at to determine what kind of conditions we're in. And that kind of tells me whether or not I want to trade pre-market. So being asked to look at CISS, I can tell you right now, this has no volume. So, you know, it could move when the volume comes in, but right now it's just kind of been in this chop zone. You know, it's not going anywhere. Hasn't gone anywhere, I should say. It doesn't mean that it won't blast and, you know, go 600% or whatever. But right now, I don't see any real reason to join it, you know, to jump in. So if we were to break this down, right? Say you got a small army here and a small army here, and they gather forces all along the way and they both fight, and it's a big bloody battlefield. You know, these guys attempt to drive them back. They hold, they drive them up. Well, I guess the camera's probably covering that. You know, they drive them back to their stronghold. They fail to break, you know, they fail to break through the castle. These guys have a lot more people up here and they just shove the price down. And now we're kind of in this stalemate. They're just sending little groups out to fight each other, kind of like for entertainment, basically. Like there's no real decision making here. It's just kind of you got like 2 groups of 5 drunk guys fighting each other. You know, they're not. Everyone's kind of holding back, right? They're not committing their forces. They're not committing the volume. There's just no participation right here. So it's going to be pretty indecisive. You're going to have pretty lackluster movements in price. And what's going to happen is this bid-ask spread is going to widen up. Right now it's a 1 cent spread. Maybe when it gets to like 5 or 6 cents, then you'll see some more aggressive orders step in. Otherwise, it's going to just require some volume. You know, we enter auction cross here in about 7 minutes, so we'll see if that gets the volume. I like the setup. It just doesn't have, like, the engine is there, right? The car is sitting there, doors are unlocked, but there's no fuel. There's no gas in the tank, right? So unless we see the keys on the visor and the gas tank full, there's very little confidence this car is going to go the direction we want it to go. We're just kind of waiting for it to get towed, right? So if we see the volume come in, sure, we can look at it. It's worth watching, but there's no point in just jumping in right here, in my opinion. FEMY, this is even worse in terms of volume. You know, we can see that something is up. You know, this had a nice big gap up, but stocks like this don't tend to hold their profits very well. I mean, you look at these big spikes, they sell off immediately. Big spike here, sold off immediately. You got a bunch of these wicks. That just means that those are intraday sell-offs. You know, you got big wicks and then sell-off. So when we see stuff like that, right, means we can trade it when the volume is there and when it's going in our direction. But if it looks like this, there's no volume. Okay. So I'm not trying to poo-poo on everything, but we want to look for quality. And that specifically is why I look for this volume to market cap ratio, because the market cap is a product, means you multiply, of the float times the share price. Good job, Porter. I love that picture. Happy family there. You know, because I want to make sure that the volume, right, which is the number of shares that have been bought and sold, that includes turnover, has to exceed the market cap, because I want to make sure that the price for the shares is in range, the float is low enough so that it doesn't, you know, multiply the market cap at a range, and I want to make sure the volume is disproportionately higher than that product to make sure that there's a lot of participation in a high potential stock. Okay, that doesn't mean I'm just jumping into everything that has that. It just means those are the ones that I like to watch. So for example, this one here. Oh, hey, alarm clock. How you doing, buddy? He likes to trade with us every morning. So this is GLTO, right? I traded it. It ran up to $36. That's insane. You know, I sold it here, I think like, was it 14 or something like that? You know, still, that's a solid profit. I took a 6% loss and then a 20+% profit. That's good enough. I walk away. I don't sit here and try to squeeze out every drop of juice. You know, the lemon gets squeezed. That's okay. I just want enough to drink a little bit and then I walk away. Doesn't mean there's not still potential, but there's no point in just watching one thing all day and hoping it continues, right? So other items on the watch list that I like, on my watch list here, and I think Mad Maverick has a couple of these on his as well. I like ZNB. It's got a nice fib retrace. You know, it's a little deeper than I like, but it's got the good volume market cap ratio. It's got pretty decent turnover so far, we can tell, and we've got some areas that we can plot out. But even this one, it's just kind of going flat. It's in a range, right? Price has to move up or it has to move down. I don't want it to go sideways. That's the one direction that we hate because it's just prolonging unnecessary risk, right? So for this one, I can see I've got a pivot here and a pivot here. I got a range here that I can draw. I'm going to put like a super tight squeezy range right there just in case we get a retest. Then I'm just going to draw a bigger range encompassing all that. And we'll see what happens if the price wants to come back down. I'd like to see it come down, bounce off this level, and go higher. If it does, great. If it doesn't, that's okay too. I don't care. I don't have any emotions about the stock market. This one here, COCH, I like the setup. I like that we've got a lot of areas of historical violence. I've got a nice little range there for it to potentially break. And I've got probably this guy right here, right? If I just had to draw some ranges, let me make those yellow because those are transitory. And I got to make a dashed line here, sorry. Because we like to be consistent with our colorings. So we'll see. You know, ULY is a great candidate. You know, we're coming back for a retrace here. We got a almost 5 candle setup so far. It's got the volume to market cap ratio is just now greater than 1, so that's great. But I don't see what I like yet. I want to see the price maybe come down a little bit further. You know, I want to look at higher time frames and see what else there is. You know, for me to base these decisions on. And right now, I don't really see a whole lot. So let me just go all the way out to the daily. I'm just going to kind of zoom out, right? I see an area up here. I see an area right here. Let's see. I see this guy right here. It's a little wide. Maybe we tighten that one up. I see this down here, obviously. That's just nice. It's tasty and delicious. And I think that's about it for what I see. Obviously, there's some good pivots here, but you know, you don't just want, I'm just going to expand these out a little bit. You know, you don't just want to plot where the price turns around like that. That's not a healthy approach to structure. So I kind of like this here as well. Now that's going to be a little bit sketchier. So let's draw some boxes and then we can come back down to the maybe 10-minute or the 5-minute and just kind of see, you know, so rather than waiting for the price to come all the way down to here, now I've got an area that's a little bit higher and a little bit more stable that I can watch. And that's transitory as well. So we'll just see if the price wants to bounce off that zone. If it does, I can potentially take an entry. If it doesn't, I don't have to. Does that make sense? SPRB it's got range, but it doesn't have the volume, right? It's 261K volume on a 73.4 million market cap. It's also a $213 stock, so I can't trade this one on this account. It's a very small account. I've got about $40 out of cash. So, you know, so I think we've got a good selection of tickers here, but, you know, that should be the low effort part of the day. In my opinion, the high effort part of the day should be sitting on your hands and not jumping into stuff just because you see shapes and colors, right? We talked in Lifetime, we talked about classical conditioning versus operant conditioning. And the stock market is filled with examples of that. So we have to be very careful about understanding why we do the things we do if we want to be successful. And that is something a lot of people just don't want to spend time focusing on because they just want to make profits. And that's where things get very dangerous. So we got to break that cycle. We got about 10 seconds till auction cross. So I'm just going to kind of peek back here and see if we can ID anything here. Oh, wrong tool on that one. Go with the 2-minute on this guy. Yeah, I don't really see anything to the upside here that I like. Maybe that guy. Kind of like that one, right? I like that zone a little bit. I really like that one. That's a nice shiny zone. Oh my God, that's nice. And of course, there's this guy. Okay, so I'm just kind of mapping some stuff out right now. I'm not really, you guys can tell I'm not doing crazy analysis here. I'm just drawing spots where the price blasted out of. Right, that's the big secret. You just want to look for areas of historical violence because that's where the violence is likely to happen again. And you can just go back in time, draw these boxes, and then walk forward and see how well they get respected. And then my job is really just to wait. I have to wait till the price comes down and shows me something that I like and that I can use. And then if it wants to dip into an area like this, give me a confirmation and I buy it and it goes up, then I make a profit. If it goes down, I take a small loss, right? I always control the size of my loss. That's my job. It's not to be right all the time. It's to be prepared. So yeah, most of these are just kind of hanging out in the middle of these zones. It's not a good opportunity to just jump into stuff so far. Right? The volume will come in. I have no doubt in my mind that some of these will get volume and we'll get some big moves and all that. It happens every single day, at all times a day. You know, it's even in lunchtime, the stock market is generally slower. A lot of the low float slow down, a lot of the large caps slow down, but there's still stocks that just tend to run throughout the lunch hour. So we don't have to be worried about missing opportunity once we accept that, you know. But that's where, again, people tend to hurt themselves because they just want to make stuff happen. So I would rather protect my money to a sensible degree and then have it there when the opportunities that, you know, are much bigger come along. So of course I say that, and then I have a SPY contract in here that's going to expire, and that's okay. I've accepted that loss ahead of time. And as I explain, I kind of use those on my, it's tax harvesting. So it's getting into the end of the year. I don't want wash sales. So in December, late November, December, I stopped trading SPY and I migrate to SPX to offset my capital gains. Yeah, DVLT was insane. That was nice. I do like that one. And this one, like, again, it's got good, beautiful direction, but you know, if we zoom in a little bit here, we can see that these candles kind of look like crap. So you have to go either to a higher time frame, trade wider ranges, or wait till that volume comes back in and really slams the price to the upside in the direction it's going to make you money. And if it stops doing that, we can just cut it and get out. All right. So I got my picks picked. We can see here ULY is starting to come down to a more reasonable level, which is nice. So I'm going to go ahead and get my order ready on that one. So I got 40 bucks. I want to do, since we're pre-market, I just want to do one trade. I think I'm just going to grab one share of this one. I don't want to go two balls to the wall on this. All right, so price is in an area of high potential, right? And on the higher time frame, we know that this level acted as a displacement origin zone. So on the lower time frame, we can see that the price is approaching it, but we still need a confirmation of some sort. I need something that tells me that the price, you know, every single one of these candles has a lower high, meaning that every single candle failed to break over the highest point from the last candle. So not the best time to be jumping in ahead of time when something's still struggling, right? So that tells me I can wait for a level to break to the upside in the direction that's going to make me money. And then when that happens, I can then place an order in the direction of the momentum if I want to. Now we all are also coming up on market open here in about 45 seconds. So I got to be mindful of that, which is also why I might just do one share. I don't want to go super crazy there. We got about 38 seconds left. So I'm just going to peek around a little bit, see if there's anything that I like in an area that I like. Not quite. Not to the upside, right? This would be beautiful for the downside, potentially, but it still didn't test that zone up there yet. So we're just kind of sitting on our hands a little bit, just kind of waiting for things to give us better opportunities. Remember, we want those A+ setups. We want high quality, low risk, high potential opportunities. We don't want high risk, low potential setups, right? And if we have to stop out, we stop out. There's no questions asked. yeah, I think what I'm going to do here is I'm just going to enable, because the market's open right now. So I'm just going to go down here to the one share, single share quantity settings, and I'm going to enable that. And I've got two hotkeys here. So I've got one set up that has a 1% take profit. So I'm going to just push 8 and 9 here. And did I get my 8? I don't remember if I did. Let me check my orders real quick. I did not. Okay. So I got to, sorry, I got to place 2 buy orders here. So control 8, basically, I'm gonna cancel that sell order there. Basically, what I talked about yesterday on my other stream is that if we want to place multiple buys, there's a really cool strategy we can use to keep our risk exposure minimized. Why is this not filling? That's weird. Might have to refresh my. Okay, so we did get filled. But anyway, I was talking about how we can sell half our position at 1% or some very achievable, very low, very close profit percent. And that'll take half the risk of our normally sized position off the table. We have to be very careful doing things like that. I don't know why. Did this halt? Yeah, I don't see any movement on time and sales. But I also don't know. Yeah, it's halted. Okay, I was going to say I also lag a lot. My internet sucks at market open. So that's also a factor I have to contend with a lot of times. So anyway, it's part of a larger conversation yesterday, so I'm not going to get into it today. But, you know, there's potential in that one. But I'm going to start doing that on this account as well. So basically, the concept is that if I plan to trade $10, I'll buy whatever $10 gives me, and then I'll sell $5 worth or half at like a very small achievable target. And that provides a solid foundation of just secure, consistent profits. And it reduces the overall risk exposure on open positions. And then it just gets a lot easier to grow a portfolio. So I'm just kind of keeping an eye out. So this one here wants to push up. You know, you can see it's got some strength, but it's not in an area of, like, it doesn't check the box, right? It's not coming out of an area that I like. It doesn't, you know, it didn't really test this. It's kind of a shallow thing, which is great, you know, early strength and all that, but it just doesn't fit, you know? So I'd rather just catch one that makes a little bit more sense. I'm just looking for things off my areas of high potential. Ideally, we see like a close inside and then a close outside. And that's typically when we get our better entries. Sorry, my window's open. So just kind of keep an eye out on these. Just see what we get. Now for this one here, I could very easily just take another entry on a break to the upside here, but I think I'm just going to wait and see if it wants to come back to this orange box. You know, this is nice and all, but I don't want to jump into a bunch of stuff in the first, you know, couple minutes in the market. Also, let me make sure I'm not muted. Okay, I'm not. Sometimes my StreamYard gets me muted and I hate it. So I'm just going to hang out. BJDX, you scalping that one? Where's that one? That's right here. Oh, wow. Look at this guy. Look at Mr. Top. Scalping it. I love it. And, you know, again, it's the same concept, right? So you just look for these big candles, and then you just draw a very simple shape, like a rectangle. And if this was all the information you had to go on when you drew that shape, okay, you say, okay, well, here's some abnormally sized candles. So I'm going to draw a box right here into those candles, right? The candles that precede those big moves. And of course, you have some more up here where it catches the price and slingshots it back down. But look at how well respected this box is. You know, you get some nice, beautiful retests. And then again, in the future, you have more violence out of that same area. And that's the general concept. So did I enter CISS? No, I didn't. It didn't give me what I want. So it's in the box, but it didn't break to the upside. So no entry. And there's just, again, there's no volume. So volume is king when you're trading this stuff. Looks like GLTO halted. I'm not in that one, obviously. TMQ did break below that box. That's why we don't enter until we get a good sign of strength going to the upside. ZNB is kind of hovering. It's going sideways, low volume, not something we can really use. Oh, here we go. So ULY is definitely in the area that I like. Let's see when this one's going to unhalt. Or did it already? No, okay. So it's got about a minute and a half. So this one I will be very interested in. but not on halts. So let's keep an eye on the 936. COCH again, if opportunities pass by, it's okay, right? I don't mind it if something goes while I'm not staring at it or throwing money in it, right? It doesn't check all the boxes. Check box number 1 is it needs to be coming out of an area of high potential. So if it's not in this box and coming out of that box, I'm not going to buy into it personally, right? And again, it doesn't mean that it can't just blast. It just means it's not giving me my specific setup that I'm looking for, and I just want to be a little bit fussy about it. So ZNB is starting to get some direction, right? It's coming back to an area of potential, and this yellow box right here is really where I want to see it come to. Then I want to see another piece of violence off that same level, just like we saw back here. So we'll see if we get that. ULY should be in halting here in about 30 seconds or so. Let me just unclip my, unbutton my sleeve here. It like rubs on my desk when I move my mouse around and it just gets annoying. So will ZNB come down and get us in that zone and then bounce? Or is it just going to hover and displace a little bit and then kind of meander a little bit? All right, ULY should be on halting here in now, anytime now. So let's see where that one goes. First thing it's going to move is going to be the time in sales. And then you're going to see the price kind of catch up on Webull. It's a little bit slow. So we'll see where that goes. Well, that's cooking. I just want to kind of keep an eye on these two. Just going to periodically check back at that one. Yeah, TMQ, it's got contention, right? It's got a lot of push and pull on it. It needs directional volume, which means that it needs actual volume. So we got to wait just a little bit longer on that one. ULY is not unhalted, which is interesting. That means that they're manually reviewing it at the exchange, which is good because that means that they might adjust the threshold. It's where did it close yesterday? It closed at 3. Okay, so it closed over the $3 threshold. So there's 3 tiers of circuit breaker halts, LUDPs. So that's a good sign for us. ZNB, is that going to give us our thing? It may. CISS, yeah, that's you just gotta follow the volume, That's nice. I was too busy looking at other stuff. I'm not going to chase it, but that's the kind of move I'm looking for out of that box. So that's good stuff. Congrats if you guys are watching that night, and stuff like this you want to scale out on the way because this could very easily just be given back. Now, if this closes like right here, above the box, then I'll probably buy in. I kind of like that. Actually, I'm going to disable this. I'm not going to use the 1% thing today. I want to just trade regular. So we got an entry. Now I want to see the price break and I want to see this candle go green. There we go. So I'm going to place 1 buy. And then if we get another push to the upside, I'll buy a little bit more. There we go. I'm going to grab 2 more shares if I can. Then I'm going to uncheck this. So I want to add to the position that's showing me strength. As that strength is present, and if it fades, as it pushes, I can lock those 2 extra shares. If it fades, I can just lock all 3 out and be done with it. So, and those who tolerate my drawings, you know exactly what I'm doing there. So, all right, so let's see what else we got going on. ULY still isn't unhalted, so that's interesting. That is very curious. I wonder what they're doing there. All right. And of course, the day's P&L is going to be red because I have this SPY contract. It's about, that's potentially like $10 worth of drawdown. So keep that in mind as a small cash account. All right. So we got our push, pull, push, and then we've got kind of an intermediary zone here, but there's plenty of strength on this, I would say. I'm not too worried about that. But anywhere up here, we can start to lock those profits, 6, 7, 8%. That's typically where we start to see some friction. And again, this should have plenty of strength. I don't see any issues with that. I'm going to take a peek at GLTO. It never touched the box, but it's a good candidate as well. TMQ is about to touch the box on that one. ZNB hasn't touched the box yet. COCH is hovering between. CISS obviously is going. SPRB is trash. I'm not trading that right now. So yeah. So now we're kind of hitting a ceiling, right? There's the heartbeat and then a high stall. And what that looks like is we've got, when price does this, it expands and contracts, right? That's a heartbeat. Those are bid and ask compressions, right? And then what happens when they stall, like they do this, and then they stall at the top, that means that they are absorbing. And then if that level breaks and it pushes higher after that, that's when we get the biggest, best moves out of the market. So we'll hang out and see if that gives it to us. I'm just going to kind of look around as well, just to make sure that everything's kind of going the way I want it to go. GLTO is nice and shiny. TMQ is touching our box almost. So this is good. I kind of like this. Now, I think in this case, it's close enough where I would probably say, you know what, we can grab one share. You know, I really would like to see a better test of this box. So regardless, I need it to break over that level either way, right? So this candle here closes in maybe 50 seconds or so. If it closes lower, I'll move this line down and that'll be my entry threshold. If not, then I will just continue to wait. ZNB is also kind of touching the box here. So this is good. They're coming down to our zones. So two things are going to happen, right? It's going to break below here and enter the orange box, or it's going to break above here and give me an entry above $7. So we'll see what we get. Oh, UOY? Yeah. I don't want to add any more to that. I'll just let it play out. Like, again, my goal here is to let it come into this box and then leave the box, right? If it wants to blast out of there with some violence, I'm going to let it, because I can just sell out of my shares as it goes. Otherwise, I think I am good to just kind of hang out for a little bit. Here's a good little test and a chop on TMQ. I had to check the ticker on that one. Now, I got to see it push out of the box, right? So this candle did close lower, so that's my entry threshold at $7. But if it doesn't push up, you know, we've got potential to come all the way down here, and I can miss all that drawdown by just not entering early. CISS is also making a little bit of a push-pull situation, which is good. I'm going to uncheck this box here so I don't accidentally sell one share when I mean to sell two. And I only have 3 shares, right? Small cash account. I got $10.50 in this position, so it's not going to be huge. But percentage-wise, you know, again, we're back up 5-6%. Those are pretty achievable. If you're trading stuff like this, you can usually get, you know, 3 to 6% profit pretty consistently. It's just a matter of locking it in and fighting the demons, you know, the FOMO demon and all that. So we'll see where this goes. Again, plenty of strength, plenty of potential. It's pushing up into absorption. We can watch the $4 wall here. It's going to have a volume threshold test, and we'll watch. There it goes. It's already pulled. So I'm going to lock 2 of my 3 shares right here because we're in the target zone. If I can get filled, it's got plenty of strength. It should easily pop over that, but we'll see if it actually does. We'll come back over and check out ZNB, and also just want to kind of peek at the other ones here. ULY just kind of halted again to the downside. Might just take a spanking on that one. And that's okay, right? Position size saves all. Looks like CISS wants to continue rallying. ZNB is really what I'm going to be looking for here. So let me draw my level. It's my entry threshold on that one. What's up with the ELY? It's just selling off. It's halting to the downside. That's just where volume's taking it. You know, I can't really control too much with that. So it's just volume, right? If you trade volume, you're just kind of reliant on where it goes. Because what you're doing is you're taking a lot of participation, right? A lot of future buys, a lot of future sells, and you're consolidating them all into one point in time, right? It's like hitting fast forward on a tape player, right? So you're gonna see that sped up resolution, and when that happens too fast or it goes too far, the market will trigger a halt, and then the price just freezes and the order stop for a little bit so it can absorb all that incoming data. So in that case, you know, if you get a chain halt to the downside, you're just kind of stuck, unfortunately. But we can avoid that from being too big a hit by managing our position size, right? And that's why we're going to be very careful and use small positions. Why am I not getting filled, guys? What the hell? What is happening? I deserve to be prioritized. Why? You guys see this, right? It's going above my order here. It's not just you guys. The market does weird stuff to me all the time. The price went up to 430. Okay, I was going to say my order had to fill at some point. But yeah, it's weird. So where do we go from here, right? We got to look up. We got to look at higher time frames. We got to look at areas where the price has kind of caught and released. And, you know, we've got an area kind of here, right? We've got a box here. Do I think this is going to go up to $7? Probably not. Do I think it'll go up maybe a little higher? Probably. It's tried it 3 or 4 times and it failed. But that's why I locked those 2 out of 3 shares. I locked 75% or more of my shares just in case, because I can't rely on it shooting all the way up here to this spectacular level. And, you know, we've got a couple little hiccups along the way that we need to contend with as well. So let's draw an orange line there. And we'll just see what the market gives us, right? We can't control where the price goes. We can only control whether or not we're in or out. Let me catch up on the chat here. Yeah, exactly, Charlie. It's got to breathe or it'll stop, just like us, right? If we stop breathing, we stop too, you know? Soccer, I bought ULY. Me too. Now, let me ask you a question. Did you do it because I bought it or because you liked what you saw and could justify it? And did you use an appropriate position size? Because I will possibly take a spanking on this one. If this doesn't push back up out of this orange box, the likelihood of this coming down to like the low 3s is probable, right? And that's not something we can control. But on the flip side here, we also have this bigger position that's going higher, right? Here's the pre-market high. Well, yeah, pre-market, I guess it's like 4 or something this morning. That'd be another opportunity to lock some of those shares if we didn't already scale out here. We're up 36%, 39%. I'm going to go ahead and lock it right here. I don't need to be in this any longer because that's good enough, right? I want to sell off as it's pushing. I don't want to get caught in a halt to the upside either, and that's probably what's going to happen up here. That was just too fast. But I think that was a good enough trade. It was 30+%. I don't need every single penny, right? I am taking a little bit of a pull down on this one, on ULY. That's a small enough position. I'm taking a much bigger hit on SPY, but again, that's for taxes. It was a planned risk, and I'm okay with it. That's from Friday. So that's going to offset. It's going to look a little bit messy in the, you know, the P&L for the day, but I've realized $4 profit on maybe $10 risk or $9 risk. And that's where we get the nice shiny results. Oh, well, yeah. Okay, how you doing? I'm going to buy some ZNB. So I'm going to buy 2 shares. And if we break over the yellow line, maybe I'll buy a third and kick this up to maybe a $10 or $12 position. So again, position size in comparison to the risk. Now, this is a pretty aggressive move to the downside coming into the zone. So I kind of want to see, right? This is the bear's aggression. I want to see how the bulls respond to it before I commit too much. But I also know that the bulls are capable of great violence here. This whole area here is ripe, right? Now, if we come up here and then we kind of push to a lower low, right? If we break below 362 here, I really want to see it come back to this yellow box. That's where I'm going to save most of my powder, right? And then I'll add some more on the way up off that zone, not down into it, not at it, but away from the zone to the upside. So right now I just have 2 shares, right? It's a unknown position right now. It's just a small piece. I don't see a lot of strength here. I see some strength. I do see a lot of historical violence, which is cool. I like that. I want to see that go. I want to do it again. And if it does, that's going to be good enough for me. But I've got very specific conditions. So it broke over here, so I'll add a 3rd share. And then I'll just, I'll have to manage the risk, right? If it goes back down, I can stop out. If it goes up, I'm not going to add any more to it. But if it goes back down, I can also wait for it to come and puncture this zone and then watch how it behaves at that zone. That's really what I want to see. So let me just take a peek here. CISS halted because it just moved too fast, too soon, too far, right? Triggered a LUDP, which is a volatility halt. Basically, it just means that the price covered too much ground too quickly, or there was too much volume, or a combination of both. And the exchange automatically has protections in place as a result of like historical like hacking and data breach incidents. So they put these little circuit breaker halts in place to make sure that people don't lose or gain massive amounts of money because of something that might be fraudulent, right? So if somebody hacks into the exchange somehow and they just pump the time and sales with a bunch of orders that never actually get filled, before the exchange can validate that, the price will drive up, people will sell, and then the exchange and the brokers just have all this mess to sift through at that point, and it just gets a little bit chaotic. So they put these little circuit breaker halts in place to make sure it doesn't happen. Is it likely to drop after the unpause? Halts are always a 50-50 gamble. You never know. There's no reliable way to predict. I don't care what anybody says. And no one's going to tell you that. They're going to say, oh, I know what I'm doing. I know if it halts up, it's going to go up. I know if it halts down, it's going to gap fill up. Nobody knows, right? So rather than dealing with all that noise and all that stress, we can just recognize where those halts are likely to occur, and we can scale out before they happen, like I did. And then we can say, okay, well, if I do get caught in a halt, I'm okay risking a little piece of my position because I already secured most of it. So the remaining piece has to go that much farther down before I can give those profits back. So I have a guaranteed net profit as long as I scale out, right? And then if it does go up higher, I still have that little piece in there. So I just get extra profits. So it's kind of a win-win in that case. But if you're just holding your entire position into and through a halt, like you see on ULY, I held this into a halt to the downside and then another halt to the downside. It's 21% down. The only saving grace here is that I used a responsible position size, knowing the volatility this thing had, right? So this is what keeps me safe. It's my ability to manage my positions and my ability to absorb these hits because of that. So halts themselves are neutral. You know, they don't necessarily have a bias. Stocks that halt down can easily shoot back to the upside. It's just a resolution of volume. So don't put too much faith in like trying to predict halts. That's the main key there. Because I see a lot of people try that and a lot of people end up getting hurt. Also, where's my top gainers list? What is happening? The market hates me. Sorry, I'm dying. Herpes. All right, so this one is coming down. This is TMQ. It's coming down to my yellow range around $6. This will kind of be the other area that I'm watching. Also, let me just check something real fast. All right. So if we can get a push down here, we got a 5-candle rule in effect. That could lead to a nice massive bounce. We'll see if that actually happens. ZNB is kind of hanging out sideways. I really want this one to come down here and just test this yellow box. But if it wants to rally ahead of time, it can. It's going to go in one of those two directions, and that's all I care about. BYRN is a lifetime trade that we got into on a similar breakout. I think we did this last, actually, what day was this? September 29th, we got into this one. That's almost 7% up for those who just want the super tight profits. We're also running into a previous pivot, which I personally don't care about. I like the strength, but it is worth at least mentioning. And then we'll see if we get a buy up on ZNB or ULY. Yes, ULY is open. And it's going to halt immediately. Bet. These are all getting filled at 419, and there's the halt flag. So that's just when you get a lot of high volume, a lot of volatility, certain stocks, especially if they don't adjust the on the exchange side. This only has a float of 1.21 million. So every time there's, you know, high turnover intra-candle, or if it moves more than like 10%, that can trigger a halt. So this is 9.5%, 13.83%, 2.56%. So there's some combination of movement versus time that keeps causing this one to halt. And that's most likely because it's a super low float stock. So we got to be careful with that. Those tend to be the most violent to the upside as well. But those will absolutely eat you alive if you're not careful. So, all right, so we're testing this zone here on TMQ. So I might look to grab a share. Maybe I'm going to go ahead and uncheck this, recheck this. And in terms of like ZNB, for example, if I don't want to hold this and it's not actively going to the upside, I can always just cut this, right? A lot of people tend to hold stuff longer than they should with the intention of trading it as it's moving out of their zone. And that's always a cycle that we can break by just saying, hey, if it doesn't go up as soon as I buy it, I can cut it. Or, within a couple seconds or within a minute. You don't want to see a bunch of sideways action if you're buying a confirmation of a momentum breakout, right? You want to see momentum. That's what you bought. So this candle here's got about 40 seconds left on it. And again, one of two things is going to happen. It's either going to break over this yellow line at 6:30, or it's going to break below this yellow box. So we'll see which one it does. If the candle closes here and it's lower, I'll move this yellow line down. That's my entry threshold. If not, I will just hang out. So the chart's going to tell me what to do. I don't have to guess. I can just say, okay, well, the chart is showing me this, this, and that. So all I got to do is listen to it, and it's going to tell me when to buy and sell and when to move my lines and all that good stuff. So it keeps me out of a lot of trouble because I really suck at guessing. We all kind of do. All right, I'm going to move this down a little bit ahead of time just because we're at the 2-second mark. So I'm going to get my hotkey ready as well on this one. And if we break over 619, I'll take an entry. It's TMQ. I'm on the 2-minute time frame. And the alternative outcome here is that it doesn't move up and it moves down, at which point we invalidate that range and wait for another break to the upside, or we potentially come down here to 575-ish. Right? So the chart is going to tell me when to buy. Does that make sense? I'm not making predictions here. I'm not trying to be, not anticipating anything. I'm letting the chart tell me what to do because the chart is the one source of data that's always going to be right. I'm going to have bias. I'm going to have opinions. I'm going to have emotions. Those all skew the data. The chart is always right in the end. It has nothing to do with my feelings or my predictions or my guesses. So I can't use those to make decisions. I have to let the chart be the loudest voice in the room. All right, I'm going to go ahead and grab a piece there. It's a little bit anticipatory. I got it a little bit early, but that's exactly the kind of strength that I'm looking for off that zone. And notice I didn't buy it at the zone, right? Because if we did that on... damn. Which one was it? Which one was it we just looked at? It's sold down really hard. ULY. Yeah, I mean, if we bought as soon as it hit the zone, we would just be looking at drawdown in a lot of these. So we can skip all that by just letting the chart tell us what to do. Yeah, most halts are 5 minutes. Depends on the closing price of the previous trading session as well. That's a factor. And the type of halt. Yeah. Plus, if they manually adjust it at the exchange, they manually halt it, and then they have to manually unhalt it. They set a timer for that. So it depends on when they review it, just to make sure there's no fraud. They spot check these because stocks halt a bunch throughout the day. And you can look at the NASDAQ halt list if you want. They just make sure there's no hacking and stuff like that. CISS is open. That's a nice one. I'm not in it. But that was a nice little pop on that one. And you can see it halted, and you got a big indecision candle right here. It didn't go up, it didn't go down, it just kind of hung out, right? So there's still a lot of strength so far. But it doesn't mean anything, right? It doesn't mean that somebody who, thinks that they can predict gaps and unhalts is going to be right more often than not. It's completely random as far as the halts go. I should say the post-halt direction, not the halts. The halts are very predictable. You can almost always tell when they're going to happen. Sometimes you get your order filled and it sits on the queue a little bit longer, and that sucks. And that's happened to me a bunch. You guys have seen that happen. But that's all part of the game. You just got to deal with that. All right, we're about 4% up on TMQ from my entry at 618, and I just have one share. Remember, this is high risk, so I want to use a tiny position. Okay. I'm much heavier in ZMB right now. Which again, this might bite me a little bit if it doesn't go. So I can always just cut this, or I can reduce the position. There's always an option there. I don't just have to hold everything to death, right? All right, since this one I only have one share, I'm not going to be too finicky about where I take those profits. I'd like to see it push through this orange box, but I also have to recognize that this is a big bearish impulse, and it just pushed cleanly through that. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles in a row with lower highs. So that's a lot of bearish strength. That's a lot of pressure on the bid. Typically we see a 25% pullback, and we just broke over that right there. So we'll see if that goes up. I'll leave the fibs up We'll see if we dip below that 25% though, I'm out. Because that's the only thing I care about. I just want to catch that bounce. So I'm talking about 646 right here. That is my hard stop on this one. I'm moving it up right now at 646. And I'd like to see a break over 721 for the 61.8%. So let me draw that one as well. But if we break down here, I'm out on TMQ. Right? Because the profit is there. The bird is in the hand. Why would I, why would I wait? Given the amount of bearishness, right? So we're kind of dancing around the level here. I could probably zoom in and fine tune a little bit. Maybe it hit, maybe it didn't. But I don't like it hanging out, right? I just want it to go up. Yep, I'm out right there. So my finger was just a little heavy on the keyboard. It looks heavy on it's pretty sparse on the bid side. So that usually means it's going to break down, or it could. But I have to, again, consider the neighborhood we're in, right? Massive bearish impulse, a little bounce. It just barely hung over the 25%, and then it just stagnated. I don't want it to stagnate. I want it to go, right? So in that case, I just cut it. If it wants to go up, that's great. I kind of exited a little prematurely. I also entered a little prematurely, and that's okay. Those are just notes that I'll make for myself. But I don't want that to influence the end result. So right now, I don't have access to future information. I don't know if it's up here. I don't know if it's down here later at 10:15. I don't know where this price is in the future because I can't see the future, right? I can only see that it was here and that it was above where I entered and it was behaving a certain way. So I decided to cut it. Okay. So I hope that makes sense. Let me peek back over here at ZNB. Again, we were down here before, so you can't let that get in your head. Let me just catch up on the chat here. Yeah, Charlie, it's slow. Very slow. Sorry. Some will watch those little spikes, wait for a pullback like it's doing, and buy the bounce. If it begins to climb again with a tight stop loss, absolutely. Again, if your goal is to, let's say that you want to just trade it from here, up to here, okay, or in this direction. If at any point it starts to come down, that means it's no longer going up. You can always lock at least a piece of your position right then and there and just get the risk off the table or get less risk on the table, right? We don't have to hoard drawdown, and that's what people tend to do. You sold CIS at 541. Nice. I'll take a look at that. Oh, you caught it on the, you caught it before the halt to the downside. That's nice, man. And you actually got filled. Good stuff. Yeah, hoarding the drawdown sucks. It's very stressful. It's a hard habit to break, right? Because we want to be right. We want things to go in the direction we wanted them and we expected them to go in. And it's just neuroscience, right? You are a reactive processor at the root of all things. As an organism, your job is to just process data and react. You respond to things in your environment. So it makes sense that when you see shapes and colors moving quickly and they're attached to, a value that represents opportunity and resources, you're going to have some feelings. You're going to have some pre-programmed behaviors, right? So it makes it pretty tough to reprogram that stuff, but it's possible. It just takes time and it takes practice. And more importantly, it takes compassion. Like you can't blame yourself for doing what you're programmed to do. And that's where people hurt themselves. They rely on self-blame to self-correct, and that's not always the best way. Like losses, for example. When you take a loss, how many people here feel bad after they sell something for a loss? Just put a 1 in the chat if you feel bad. Put a 2 in the chat if you understand what a loss actually represents. Sorry, ULY take profit. So I just got my range up here around, like above 6 probably. I don't have a take profit if it doesn't come up, right? I want everybody here to manage their own trade. I have 2 shares at 547. I will have to wait until the price comes back up before I can make that determination. And that's not something I'm going to see until the price is up, right? So I can't really, ideally we get a new high. That's almost always the preferred outcome. But we don't always get what we want, right? So there's still potential here, blah, 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 but I'm holding my shares and I'm comfortable with the risk personally. If you're not, we're here to help you build a trading plan. Charlie, don't you do it. Don't you dare. Don't you do it. All right, so I see a bunch of ones in the chat, and Top here has a 2. So Top has seen the light. He gets it. He understands what losses are. When you sell something for a loss, it is not goodbye. It's see you later, right? Just like, I don't know if I could say that, but it's a lot like corn, right? It's not goodbye. It's see you later. So when you sell something for a loss, you get to deduct that. In most cases, I can't give you guys tax advice, but I can give you general education. So basically, when it's time to pay your thank you. When it's time to pay your taxes at the end of the year, the IRS is going to be like, hey, you got to figure this number out, right? And you're going to look at stuff and be like, oh, what the hell do I do? So you're going to take your capital gains, all of them, right? Your net sum, everything that you've had a transaction on for a capital gain, which is a collection of items, under your social security number or EIN if you're filing in our company, or TIN, I guess, if you're filing that way. And then you're going to have losses as well, right? And there's 2 types of losses. There's allowed losses and there's disallowed losses. So when you wash sale, which is a more complicated thing, then you can't use certain losses. But if you have non-disallowed losses, just regular losses, you get to deduct those from all of your capital gains. So if you make $5,000 in a year and you lose $6,000 in a year, guess what? You're net negative $1,000. That means you can deduct that in most cases. Again, I can't give you tax advice, so always seek the advice of a locally licensed tax professional. But most new traders are worried about having to pay taxes for the first year, 2 years, 5 years, whatever, but they're net negative. So it's kind of a misunderstanding of how the tax burdens work. And we become very afraid of realizing losses because we think that it's, we got to pay all this money and all the gains that we've made, they go in one column, right? So every time you sell something for a profit, you got to pay taxes on it. So you got to set 33% or whatever aside. And then we just kind of completely ignore the losses because we just don't know things, right? So if you add up all your profits and all your losses and you're net negative, unless they're disallowed, you're going to have a pretty good year as far as your taxes go. It sucks you lose the cash short term, and you're right. There is a limit of the cap that you can claim, but here's how it works. It is the net sum of your capital gains and losses. So you can have $65,000 in profits and $69,000 in losses. That'll give you a net negative $4,000. You can claim $3,000 of that, depending on your filing status, right? Sometimes you can only claim $1,500. Sometimes you can only claim $3,000, but there is a limit. But it's the difference between your capital gains and capital losses. So you're not going to have to pay taxes on $65,000. You have to pay taxes on negative $4,000, which means you kind of get a deduction. So again, there's everyone's circumstances are going to be different. So I can't give you guys tax advice, but I can give you general education. So, and that's one of the fundamental misunderstandings that people have about the market, just like what moves the price. The price isn't some abnormal number of buyers coming in or abnormal number of sellers. It's specific types of orders that get priority. There's an aggressive order and a sub order on the bid or the ask, and the aggressive order reaches across. It gets matched equal and opposite, and then that's what moves the mid price up. It's not, if you think about it, every single transaction requires a buyer and a seller, right? Otherwise, where would the money go? Where would the shares go? So it just, those little misunderstandings that people tend to have that lead to these kind of weird fears and kind of misguided anxieties, right? That we can very easily just clear up. So again, if you gotta be in the market long enough to know about it, and you have to survive long enough in the market to be able to get value out of it and learn. And you can't do that if you're just blowing all your money. So if you're hoarding drawdown, you're gonna have a very hard time doing that. So if you're new, if you're trying to gain confidence, you can literally just buy a stock and sell it for a 1% profit. Just practice that. It's a lot easier to hit 1% than it is to hit 20%. We are also moving up here on ZNB. Just to let everyone know, we're up about 7.5%. I'm holding it for a little bit longer. I'd like to see a much bigger push up to maybe 5-ish, but we may or may not see that. So I will lock 2/3 of my shares somewhere around here. And exactly, yeah, if you make money, that means someone lost money. The exchange isn't going to be the one to take that hit. They're not going to pay you out of their pocket. Their job is to keep things transactional and to keep things fair. as fair as possible, I guess. So, you know, it's just, again, little things like that that people just don't properly learn, because you're not going to see that stuff on a YouTube video because people want to sell you courses and they just shove strategies in front of your face. And strategies are cool, but only in identifying risk. That's all they do. They don't predict things. There's no such thing as a predictive strategy that works, because you need trading psychology so you can actually follow it. And then you need appropriate position sizing so that you can do it efficiently. And without those two critical components, no strategy on the planet's going to help you. And I teach my strategies every day. and people still struggle. And there's just a difference, right? And that difference is trading psychology and position. It's having a plan, a robust plan, not a complicated one, but something that addresses the various angles of risk. So again, this one here is puttering around a little bit. I think I might lock some of these shares here. If we don't get a break over 440, I'd like to just watch how the volume behaves. So in this case, I'm going to step into a little bit more of an advanced role, and I'm going to look at the order book and the time and sales. And I'm just going to assess the volume here. 431 wall got chewed. 432 wall is a very small volume threshold test. So we'll keep an eye on that range right there, the 432. Let me just draw a level. 432. Sorry. So I'm looking for a break over 432 for the bigger push. I'm going to take a drink of bubble water. Refreshing. And we shall see. Charlie's got one share walking upward because it's not running. Yeah, pretty much. So now the 432 wall is at 430. So let me move that down. And basically what I'm looking for those who haven't been on my streams, I'm looking for this 430 wall to move to the top of the bid asks on the order book. And then I want to see a smaller wall get put in place. Now you can see they shuffled it down to 410. So they're kind of walking the price down. And now they've just pulled the 410, which means that we could potentially rally. But at 430 or wherever the bigger wall is, I want to see a smaller wall and a series of smaller walls get kind of put in the way. And then I want to watch how they behave, because those are volume threshold tests, and their job is to make sure that there's enough pressure, enough turnover into that level to chain fill that big wall. That's the idea anyways. They're trying to exploit the big wall by filling a bunch of orders really, 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 really rapidly. And they're all on predominantly the ask side in that case, because that's where the wall resides. So when you get a chain fill like that, they can't all get filled here. So they have to keep pushing the price up, up, up. And that's when you get those pops on the wall breaks. And then those have potential to run into the next wall, the next wall, the next wall. And that's a series of chain fills. And that's what I like to see. So that's kind of an oversimplification of the process, but that's what you really want to look for if you're a momentum breakout trader and using the level 2. But if you didn't understand what actually moves the price, you wouldn't know anything about the chain fills, because you just say, oh, there's a bunch of buyers coming in and they're going to try to overpower these sellers. It's buys and sells. It's just mixed. Do we think CISS is going to push back up again? I have no idea. We can watch it. It's breaking up out of a zone that we like, an area of historical violence. It's got potential, and we're seeing that potential now. But I can't. I don't want to predict anything, right? I see what's happening. I can't see what is going to happen. I see what might happen. Yeah, I'm watching ULY. There's nothing you can do but watch this. There's just low volume. If you're in it and you don't want to be, I mean, I can't tell you to sell, but if you're oversized, you can always cut the risk. You can always set a hard stop just in case it continues lower. I'm just going to keep holding mine, but understandably that there is pretty substantial drawdown on this one. And that's just them's the break sometimes. You know, I'm down $2.76 so far on that one, and it halted again. So I really hope you didn't put too much into one position. You know, if you did, that makes sense why you want to focus on it. But that's something we can fix, right? We don't want any one stock to make or break us. And that's where it gets very tempting to want to jump into stuff and lean in a little bit heavier. Trust me, I know. But we got to be careful with that stuff. So I like ULY. I still like the potential here. You know, it's still approaching an area. It's actually in an area of violence right now, and it's kind of creeping out of it, but it's got these halts that it just has to overcome. And unless the exchange wants to adjust that, or if we get some very aggressive ask fills, it's probably just going to take some time before that goes back up. So we're just kind of sitting in that one for now. And that's why the other trades have to offset that drawdown, right? So we don't ever want to predict and we don't want to over allocate. We just want to give everything a chance to breathe and really focus on the areas that have the best potential to breathe. So right here, for example, this is an abnormally large candle. Okay, this is on the 2-minute time frame for ZNB. And you can see it's just bigger than all the peers, right? So what we can do in this case is we can just draw a little box. Not on the fair value gap, right? A lot of people subscribe to fair value gaps and they misuse them. But we understand what they are and how they form, so we can use them differently. And we can identify the area which caused the fair value gap and have a much better end result in most cases. So now I just want to see a push out of this area with some strength, similar to the strength that we had, back in the day, right? And we've got this local area of strength. We've got a show of strength out of this area. We've got a pretty good distribution zone. We've got a nice underlying foundation here for a bigger potential bounce with much more violence. So this is a good area of high potential. So low risk opportunity, high potential range. All we need is to show a strength and then a confirmation, and we can trade it and we can let it do its thing. Hey, what's up, Death Gun? How you doing? What time do you got to go to school? I got about 45 minutes, by the way. But I want to get your passive income foundation set up. You got class 45. I got a meeting in 45, so let's make the most of it. All right, so let me open up Miro here, and I'm going to keep the Weeble up in the background. And I want to talk about financial stability, because this is the, let me just keep, I'm just going to move this over to my other screen. I'll keep the Weeble up on the other screen. And I'll just update you guys on those positions as they go. But for right now, I want to talk about building a trading plan, right? Every trading plan should have the same core components. It should have position size management. It should have some sort of due diligence process or reflection process / journaling. It should have, ideally, consistent contributions, some sort of inflow and reflow. It should have the position sizing, as well as the number of trades pre-allocated. It should have a strategy for take profit risk reward ratio, as well as one technical strategy or two technical strategies max, and then also a plan for the losses and the profits. Okay, so we're just going to cover one example of a trading plan, and this leans more heavily on passive income and compounding reinvestment. So it's a great place for any new trader to start. I see a lot of people tend to jump into the market and they just get wrapped up in the speculation stuff because they just want to be right and they want to make money fast, and they see it all over YouTube and Twitter, and they end up blowing themselves up, and I hate seeing it. Also, I got to pull up this just in case anybody comments on social. Sorry, let me just pull this back up. So for those of you that have been through these streams, you probably know what I'm going to talk about here. I'm not going to go super deep in the rabbit hole in these, but I want to talk about one thing that matters most, and that is financial security outside the market. This entails having a clean, visible, full budget mapped out. You want to see all your inflow, all your outflow, all your recurring things, even your Netflix subscription, gas and grocery allocation. You want your health insurance, your mortgage, whatever you pay, right? You want it mapped out. I can come up with some templates for you guys if that's easier, but most people, especially nowadays, they just don't have visibility of their budget. And they don't know their inflow. They don't know their outflow. They just kind of know they're comfortable enough or they survive. But you'd be surprised how just mapping things out, and if your flow is negative, that means it's even more important to map it out, because we need to optimize that outflow, right? Let me ask you a question. Who here donates plasma? Just put a 1 in the chat if you do, 2 if you don't. It doesn't affect anything. I'm just saying that is something that can easily make you some money. If you're eligible, right? Not everyone's eligible, so it's kind of an opportunity that everyone can kind of explore if they can. But obviously, everyone's going to be unique and all that. UOY is going up, yeah, a little bit. It's up like 2% for now. I'm keeping an eye on it. But that's hundreds of extra dollars a month and it helps people and all that, so you can feel good about it, blah, blah, blah. But that's something that most people don't consider, right? Or they just can't do it, and that's okay too. How many people here have a side hustle? Like, do you mow lawns? Do you do Grubhub? Do you do handiwork? Do you do websites? Do you do any kind of proofreading on the internet? Do you write articles for blogs? Or is this your only source of extra income besides your job? Barring like child support and stuff like that. You're a skillless fella. Okay, well, that means you have opportunity to improve your resource pool, right? You don't get paid to donate plasma in the UK. That sucks. I'm sorry about that. But there's some opportunity over there to make money. I guarantee. You can drop me off in the middle of anywhere, as long as it's not like a hostile nation. I'm willing to bet I could walk away with some cash somehow. Someone always needs something, right? And I'm not talking illicit trades or anything like that. I'm just saying that there's always some market that can be contributed to in exchange for cash or some sort of other resource that can be bartered. Like, it's the goal here is to make sure that you can figure something out that doesn't drastically impact your lifestyle. You don't want to go work another 9-hour job to make $200. That's not worth it, right? Unless you're starving and then you don't have a choice. But most people have better options out there, better prospects. So in the case of financial security outside the market, if you don't have a clean, visible budget, you don't know how much money you should be seeking, right? You're just going to be out there just taking on extra jobs for no reason, just to have extra. And that's what a lot of traders do. They buy positions just to have them. They hold their shares just to have them, just in case. They let their profits run up higher and higher and higher just to have it. And then they don't lock them in. They don't make it an efficient process, and they end up just committing too much time watching those profits go away, and it's rough. So we got to break that cycle. So we want to make sure we have visibility, and then we want to make sure that we're deliberate. We also want to do things like build our credit score, because without a quality credit score, you're just going to pay more in life than someone who's got a decent credit score. If your credit score is below 760, you're going to pay higher interest rates. You're going to be potentially declined for things like apartments, jobs, all kinds of stuff, right? I know a guy that got kicked out of a band. He's a drummer. He got kicked out of a band because his credit score was too low. It's that stupid. But you also don't need a lot of money to build credit. You don't need to pay to build your credit. You can actually get paid to build credit if you do it the right way. And it's another one of those misunderstandings that people are given as children. It's a generational thing. Like the belief that you need to use 30% of your credit limit to build it efficiently. You don't. You want to use less than 10%. But people assume that they have to use, 30% of their credit or just underneath that to really optimize that credit score growth. And that's actually working against you. And that just comes from people not understanding how FICO scores are calculated. There's people that pay off their mortgage early. Your mortgage is a goldmine for credit establishment. So don't pay it off early if you want to have that age of accounts, 20, 30 years down the line, and have a really high quality seasoned account reporting on your score and keeping it up, above 760, above 800, whatever. Obviously paying stuff on time is the most important factor, but there's other factors that go into it. So the goal is to have access to as much credit as possible and use as little as possible, and to pay it on time. That's the trifecta, right? If you got locked in at 2021 with like a 3% interest rate on your mortgage, you're sitting on a gold mine. Amortize it, yes, bring that principal down, but you don't have to just keep closing things out and just being debt free. There's healthy debt, and then there's unhealthy debt. If you have access to $26,000 in credit and it's all on 19 to 29% interest credit cards, you are sitting on unhealthy debt. You're probably not going to break that cycle unless you make a lot of money. So if you have a 3% mortgage or a 6% mortgage even, you're still in a great position because that's a much healthier form of debt. You're at 2.125% on your interest. That's insane. Hell yeah. So again, just map out that budget, start building the credit. Those are two things you can do today. If you need help with that stuff, I can help. That's not that big of a deal. But it is something that most people just don't prioritize. They just don't have it in place, and it's something you can do right now. If you have your budget mapped out, you can go through every single recurring expense you have, pick up your phone, make a phone call, and get a promo in a lot of cases, or at least ask. It's worth having a phone call. It's worth taking advantage of retention promos. It's worth taking advantage of new customer promos. you know, a lot of times if you just message these people or call them and say, hey, I really like you guys. I've been with you for a couple of years, but I found a better offer and I'm looking to cut costs. What do you have? And a lot of times they'll just give you a discount, you know, just because you're the one who picked up the phone and asked. So if you're not doing that, that's an opportunity. I asked last week who is aware, who's ever refinanced an auto loan, and nobody, it was the dude, I think was the only person that ever even looked into that. But they'll do it for a mortgage. People always refi their homes, but very few people consider refinancing an auto loan. It's still a loan, right? So just better financial literacy will provide a more solid foundation. It'll provide better opportunities because you're not going to be paying extra in interest that you don't have to pay just because your credit score is like 420 or 460 or something, right? It takes a little bit of time to build credit, but you can do it very efficiently and you can get paid to do it, you know, or pay very, very little if you don't have certain opportunities available, right? You could do credit builder loans. You can just take out, you know, starter credit cards and just not use them, you know, put $1 on them, take one out like every 6 months or whatever. There's all kinds of ways you could boost your credit score relatively effectively. So once you have financial security, you should have at least some way to make progress to get to a net positive end result month over month. And that will allow you to step into consistent contributions. If you have money in the stock market and you are net negative in your budget, you have net negative outflow, you got to fix that balance, because that money, consistent contributions, ideally could have been used to pay down some principal or something, right? It depends on you, obviously. Everyone has unique circumstances. But if you're not focusing on that and you're just constantly depositing money into the market instead of paying off your obligations or optimizing your expenses, or at least investing in something that'll help you increase your inflow, you know, there's an opportunity there for you to kind of bring those two into closer balance. Because the goal is to make consistent contributions, right? And you can also do things like make donations, right? Who here knows what the annual donation limit is on your taxes? Just throw it in the chat if you know it. Just right off the top of your head. Like you can bring clothes to like Goodwill right now and get an itemized receipt, and then you have a limit that you can deduct. The answer is it's going to depend. It depends on where you live, right? Like someone in Australia might have a different answer, but in the US, there's a limit to which you can claim in donations, and most people don't do that. And instead, they just throw stuff out. Will I check you out? Yeah, ULY it's not going anywhere. Here, it's right here. It's just hanging out in the zone. We don't want to get glued to the monitor. That's not a healthy way to live in the stock market. If you're still in it and you're that, like, I'm not like saying you're frantic or anything, but if you're that focused on it, a lot of times it's better just to set some orders, set a bracket order, and just walk away. Because if you constantly focus on that, it's just going to cause you to second guess. You're going to keep doing analysis. You're going to keep monitoring it, but you're not getting paid anymore, right? It's like hanging out at your job after you clock out. Like, I don't like doing that because that makes me become a slave to my boss. And in this case, the boss is the market. So I'm comfortable holding. I've got my risk. It's pre-accepted. It's predetermined. If the drawdown is a stress factor and it's causing, you know, potential for impulse, or if it's getting, if it's making you kind of want to focus on it a lot, then that just means maybe you're not in your comfort zone, and maybe it's worth cutting that risk exposure and studying yourself and kind of studying the thoughts that you're having. Ideally, again, we got this when it was going up. We want it to just continue going up. So if we don't want to keep holding it because that doesn't align, then we can always just cut it, right? So back to this. And yeah, ZNB is kind of doing the same thing. It's just kind of puttering around. It's not really displacing. I want to see a big displacement. To CAC says, I save all my little donations to GoFundMe's in an email folder and put on taxes. Yeah, I scan them in. I just have them in a folder in my hard drive by year. Yeah, exactly. You know, you committing effort and focus doesn't do anything but prolong a dopamine anticipation drip. And again, that's just a neuropsych thing. It's how your brain works. Because you gave it attention, because you gave it effort analysis, you have an expected outcome. And the longer it takes to get that gratification, the more dopamine your brain has to give itself. It's a little bit complicated, but basically there's a part of your brain called the nucleus accumbens. That's the reward center. It wants drugs. It wants dopamine. So when you anticipate something, you get a surge of dopamine. When that expectation isn't met, the brain cuts off the dopamine because it wants you to be impulsive and resolve whatever's getting in the way. And that's where anxiety and frustration and kind of impulse come from. We want to just do stuff to make it happen sooner. So when that nucleus accumbens doesn't get its fix, basically it starts breaking into houses and stealing copper pipes. And that's when we do things that hurt ourselves. So one of the best ways that you can reframe that is to change the expectation and just not focus on it. You have to kind of deprive yourself of that stimulus. If you're already conditioned to, go for a walk, that's perfect. You can always set brackets. That way, if it goes up, it goes up. If it goes down, it goes down. You don't control that. You only control whether or not you're in and when you get out. So it sucks that it drew down. I'm right here with you, right? I took a hit on it as well so far. But I also have a fixed cut point where I don't want to hold it any lower. And I have a target in mind where I don't want to hold it any higher as well. And to me, those levels are exactly the same in terms of emotion. My goal is to simply get out. It doesn't matter, whether my ego is part of the end result, because that doesn't do anything. It's a non-issue, right? And it takes a little while to cultivate that mindset. So getting back to this, though, when we've got financial security outside the market, we understand tax deductions. We understand all the things that go into optimizing our finances. We've got a good, clean budget. We got all the promo discounts that we possibly can. I think, what is it? You guys can do, what is it? I think Capital One has a browser extension, and it will automatically look for test coupons when you do checkouts on like Amazon, eBay, Grubhub, I think DoorDash as well. Various sites with e-commerce, it'll look up promo codes for you and try to apply them before you even check out. So it's a free extension. I can't remember what it's called. It's Capital One something. Honey's another one. I think, didn't they get scammed though? Or weren't they involved in a scam? Yeah. I like Capital One. It's decent. But I like Capital One in general for people that are building credit, because they also have that free, zero APR credit card, or zero fee credit card. And if you don't have any credit or you have very low credit, they can get you like a couple $100 limit just to get you some credit reporting. And again, it's just like, I would just put $1 on it and then just pay it off after the statement date before the due date. You're going to have a good time building your credit if that's where you're starting. So financial security is squared away. We're at the point where we can make consistent contributions. We have a relatively similar quality of life. We've made some compromises on certain things, but ideally nothing that impacts our day-to-day, because those are the hardest habits to break. They're the hardest compromises to live with. So we want to make sure that we do things that make sense. Like instead of doing Grubhub or DoorDash, maybe we just use Instacart, and we kind of gradually lean into that more. And we just either, use some prepared meals, or we do some beginner easy meals, just to kind of get in the habit of making stuff. And then we can progress from there. It's a muscle you have to develop if you don't have that discipline. Let's say you're a college kid, you've just never been away from home. You're going to just want to do Grubhub all the time. It's accessible. The brain wants to follow the path of least resistance to get the best reward. And that's when we tend to hurt ourselves. So we have to reprogram those habits without blaming ourselves. You're not just a fat piece of crap that can't control your spending. You're a processor, right? You have to view yourself with compassion and understand that you're an organism. So the monkey out there in Borneo, the orangutan, they're going to grab the fruit that's going to get them drunk. It's the fun one. That's what the brain sees a reward in. So it's going to do that first, right? And then you take those away, and then it's going to unleash its ability to memorize 400 plus square miles of terrain. And it's going to get back to what it was doing before it started getting high on fermented fruit. So let's be the end result as much as possible. So anyway, that kind of, I'm going a little bit off topic here. I got a little bit of time left here. So we're financially secure. We're making consistent contributions. That in essence turns our portfolio into a savings account, right? That's what we should be treating this as. It's a savings account. We control the interest rate. We control the risk. Now we need to find many, many ways for money to come into this account, right? So the first and easiest one is just going to be manual contributions that we make just to keep some of our money aside if and when we can. I don't care if it's $5. I don't care if it's $2. Everything adds up as long as it doesn't drastically impact your quality of life and disrupt your ability to follow your plan. Just get it going, right? The hardest part about going to the gym for a year is showing up to the gym the first couple days, right? Once you do that, then you can get in the habit of going into the gym, and then you get the workout, you get the reward, all that good stuff, and then progress is made. So what do we do after we've got this savings account started, right? We've got money flowing into it. It's just sitting there. We're not doing anything with it. We might be tempted to do like Robinhood Gold or the Webull, 5% APR or whatever. I'm not doing any of that, right? Because A, you have to have enough money in there to offset the subscription fee, and B, there's just better ways to make money, right? If you can get, and this is kind of where it's cool, right? If you can get 2% annual on a bank savings account, it makes sense to keep your money there. If you can't achieve a net positive end result in the stock market and you're losing money in the stock market, there's nothing to force you to keep your money in the stock market. You can put that same money into the savings account and get that guaranteed 1.5 to 2%. You can get a high yield savings account, 3.5 to 5.5%. That's better than a regular savings account. If you have 401k, you can get 6 to 8% in a lot of cases. There's CDs, there's bonds, there's all kinds of different instruments out there than just buying and selling stocks. But let's say that we've got to the point where we want to start branching out into the stock market because we think we can do better than 2%. And we've practiced it on paper. We can definitely achieve this. So let's find a way to use this money and get some real profits that outperform a bank. Because the bank's ripping everybody off. They're taking your money and they're loaning it out, and they're collecting 8%, 10% interest, and they're giving you 1 or 2% a year, where they're collecting 8 or 10% on each payment. And they loan it out to a bunch of people. Those people then deposit that same amount of money into the bank because they buy stuff, and then they loan that out again and they collect more interest. So they're just skimming over and over and over again on the same amount of money, but they rely on money flow. So we need to copy what they do and increase that money flow and collect those small interest payments. So what I like to do when I deposit money into my accounts with my consistent contributions is I like to break it up into 2 portions. I put about 70% of whatever my contribution is into the investment side. And that's where I'm talking growth stocks, dividends, passive options, things like that. And then I've got 30% or smaller amount into speculation. Okay. And the reason I want to do that is because I want the bulk of my money relatively safe, and I want it to grow and yield bigger results over time. And I want the smaller amount to outperform that short term, right? If I can make 5% a month on 30% of my contributions, and I can make 5% a year on dividends, which is underperforming what we normally see. Normally see like 5 or 6 times that. I've the speculation amount to do most of the work early on without committing most of the capital. I want most of the money to sit in investments because that's smart. I'm not exposing it to the ups and downs of the market from day to day, so I can have a better time. But this is where most people have a little bit of an aha moment, and they say, well, crap, I put all my money into speculation and I don't invest any of it because I'll start that later, right? The lie that we tell ourselves is we're going to speculate, we're going to make big money, and then we're going to start investing. Then we're going to park it in the safer stuff. And that never happens, right? How long have you been telling yourself that? And how much of the speculative money are you just giving back every month? And it sucks to hear and it sucks to say, but it's a difficult cycle to break. And you just kind of have to sit down with yourself and have that talk. You can skip all that stress and all that loss by just putting it in investments to begin with, and then keeping a smaller amount just for speculation, right? And here's the reason I want to do that. So if we just look at the dividends, the investment allocation, this is just for passive income. It doesn't have to be dividends. There's many different types, but we want to diversify and have stable holdings and all that good stuff to, balance out our investments. And we want the money to keep coming in, right? Think of these like loans, because that's literally what they are. When you look at a company that offers a dividend payment, you want to look at 3 things, okay? You want to make sure that they are making money, the CEO is making money, the board, and you want to make sure that they're willing to share it with investors. Okay, that means they need free cash flow, they need a good dividend yield, and they need to be able to outperform that dividend adjustment that happens quarterly or yearly, whatever it is, in order for the share price to continue to increase, because it gets reduced every time there's an ex-div, right? So when you buy dividend stocks, you are literally giving your money to a company, okay? And they are improving their business with your money and they're paying you back in exchange for giving them money. So what you've done effectively is you've given this company a loan after determining that they're creditworthy. So in looking at the metrics, you decide the company's credit score, okay? And then you figure out how much money you want to give them. That's their credit limit. That's how much the size of the loan is that you're willing to offer them. And then in exchange for that risk, you want the interest rate, you want the payment in the form of a dividend so it comes in consistently. Does that make sense? We want to copy banks as much as possible because they've already figured it all out. So we're just doing what banks do. So go ahead and put a 1 in the chat if that makes sense, 2 in the chat if it doesn't, or if it's not accurate. But I want to make sure that makes sense because that's literally what we do when we buy and sell stocks. We want to look for a worthwhile risk. We want to make sure that that worthwhile risk has high potential for a yield. And then we want to make sure that we have terms to that risk so that we can cut it when it's appropriate or ensure that we're getting, some minimum threshold in terms of payback. So when we have these dividend payouts, they pile up pretty nicely, little couch profits. It's not going to make you millions of dollars up front, but it's consistent. It provides a floor along with your consistent contributions, increasing the size overall of the portfolio, and the dividend payouts being reinvested, right? Let's say you got 7 stocks, they all pay 20 cents a month, whatever. That's $1.40 per share, roughly on average, that you would be able to reinvest and grow this specific piece of the process a lot sooner because you have extra money coming in. So not only do you have one path of revenue coming in through consistent contributions, now you've got 2 coming in because you're getting these constant dividend payments that are just bombarding the portfolio. They're small, but like raindrops, you can have a flood in some amount of time, right? Depends on how long it rains. Okay. So that's really where you're going to make your money, because even if you do really, really well at speculating, you're still going to run into liquidity ceilings. You're going to need a place to park your money. Okay. You can't trade low float garbage up into the millions of dollars, because if you try to trade with $250,000 right now and you put it into a stock like ULY or something that's $3.68 and it's a 1.21 million float stock, guess what's going to happen? Your orders are going to populate the ask. Your orders are going to reach across the bid. They're going to fill as much as they can at that price, and then that's going to push the price up. So you are going to affect the price just by trying to get filled. And then what's going to happen is if you do that enough and the price goes up high enough, other people are going to start to sell. You've become exit liquidity for them. So they're just going to take your money. And that's why you can't do that. You need a bigger pool to put that money into, and that's where the investments come in. So you want to start that ball as early as possible so it can snowball over time. Okay. Sorry. And then, obviously within this amount, you can also hedge and you can do things. You can trade like yield max ETFs and offset the capital gains, because these are capital gains. Every time you get a dividend payment, you have to pay taxes on it. So, and that's where tax loss harvesting comes in, because you're getting such consistent payouts. They add up over the course of a year. If you have a lot of shares, you're going to have to realize some losses to bring the tax burden down. Otherwise, you're going to be in a higher tax bracket and it's going to suck. You're going to give more than you have to back to the IRS. So just like over here, when we did our budget and we took advantage of those promos, we want to make sure that we're getting the best possible deal for what we have to pay, So it's the same thing with the IRS. You don't want to pay more than necessary for taxes. I'm not getting any extra representation. I'm not getting any extra services out of the government. I'm just paying more for the hell of paying more because they're asking for more, because I made more, right? So my goal is to bring that number down as low as possible without committing fraud. And that's my job. I have to learn how to do that. So once we got the investment side squared away and things are, again, companies that are creditworthy, we loan them money, we get paid interest plus the value of the investment appreciates over time. And we can sell that plus and minus for taxes and to lock in those profits when things peak out. Okay, so that is 2 streams of revenue into a portfolio. The third is going to be the speculation. And again, if you're not able to achieve a net positive end result with speculation, you can always paper trade. You don't need to lose your money trying to figure this stuff out. This part should be very simple. Doesn't mean it's going to be easy, but it should be very simple. You want to buy stuff when it goes the direction that's going to make you money, and you want to sell it when it stops doing that. Right? Very simple, very difficult. Sorry. So within that, we need a trade per day or a limit of trades. We need some sort of cadence, right? So if you want to take 5 trades a day, that should be your limit. You shouldn't take 6 trades. You can take 4 or fewer. That's always okay, right? Not trading is always better than trading in terms of preserving capital, but you don't ever want to exceed your trades per day because those little compromises cause inefficiency, right? And then for each trade, you want to have a position sizing rule in place, which is where we can do like the 1% rule. We can use fixed positions. We can use risk-oriented position sizing. Like if something's high risk, we can use a smaller position. If something is low risk, we can build into it and use a more aggressive position size. But we should have a limit for everything that we trade. And then the goal for that is to give you a finite set of outcomes. And this little result matrix is what's going to direct your unique combination of profits and losses. So if you take 5 trades a day, they're all $20 a piece. You have a 2% reward and a 1% risk max. You'll either get 40 cents positive or you'll lose 20 cents on each trade. And that will return either of these 6 results, or the 7th result is no dollars because it just means you didn't trade that day, which is also a very valid end result. But let's say you've got these 6. 4 out of these 6 are net positive, which means you would have made a profit for the day. 2 of these are net negative, which means if you lost every single trade, or if you lost 3 out of the 6 or 4 out of the 6 trades, or sorry, 4 out of the 5 trades, you'd be down 40 cents for the day. All other scenarios are net positive, which means reinvestment. And the 2 scenarios where you're net negative get used for taxes, and that's a number that you can keep track of so that you know when it's approaching the end of the year. You already should know your capital gains for the year, your disallowed losses, and your capital losses for the year. So you can just kind of offset the difference, bring yourself back down into a lower tax bracket, and then really make these dividend payouts count for more, because your refund's going to get bigger, which means that you can make another yearly contribution. Because if you overpay, you get the refund, or if you get credits, you get a refund if they exceed, right? And then that's a 4th stream of revenue coming into this portfolio, and it just gets stupid, really stupid over time. Okay. So I don't want anyone to just start with speculation and just stay with speculation and promise themselves that one day they'll do good enough to build into income, passive income, and grow investments. I want everyone to start looking at that now, because tomorrow is always going to be tomorrow, right? Especially if you're net negative on the speculation. If you can't figure it out, if you're harvesting drawdown, or if you're struggling, right? The investments are always there just as a way to park the cash. It could be ETFs. It can be, I would consider this even putting it into a high yield savings account or something, or CDs or bonds, right? Depending on interest rate and whether or not you need that money flow. That's just as valid as putting it into 7 dividend positions. I don't want anyone to feel like they have to, keep all their money in the stock market. That is not good financial practice. You're not being responsible, because you're putting it all into some machine of uncertainty. And our brains don't do well with uncertainty. We need certainty. We find certainty or we make it, right? That's how our brain works. So there's nothing wrong with just having multiple savings accounts or CDs or, any other form of investment, So does that make sense so far? I hope so. If it does, put a 1 in the chat just so I know, and a 2 in the chat if it doesn't. Then we can talk about the specific components of it before we got to jump off. Shin says 1. All right. Shin, what's one thing you can do today to fix your financial future for free? Let's say you were, let me see here. If you were, who's new? I see red is newish to the stream anyway. I can't see all the names because they're cut off. Sorry. Porter says 1. The Snowflake for stream. Hello. Glad to have you, Snowflake. I bet you do great in lifetime. Shin says shop less Amazon. What are you basing that decision on? So I'm actually glad you said that, right? You said shop less, which is an action, right? And an action is something that we want to have a reason for, right? Cause and effect. We want to have justifications for our action. So if your action is to shop less, that's usually a symptom of high outflow, right? You're spending too much. So you're trying to cut out one of the expenses, right? So in order for that to be a data-driven decision, that means that we should look at the data, which means you would start right here and get that budget fully mapped out so you can make that decision with confidence, right? It's the same as in the market. You have to have visibility first and understand what tools are at your disposal. And then you can make decisions, right? You need data, then you make decisions. You got to have a cause and then a behavior, right? And yeah, shopping while bored, that's a huge obstacle for a lot of people. That's just the brain seeking gratification. You know, retail therapy is a very real thing, and it is very costly for a lot of people. So getting that budget mapped out and also looking for discounts. You know, if you're going to shop, that's okay. At least spend as little as possible without, you know, you don't want to be a super Scrooge about it. You don't want to just split toilet paper into 2 sheets, you know. I know people that do that. They don't flush their toilets. And it's too much. Like, don't ruin your quality of life. Don't eat ramen just for the sake of saving money. Like, feed yourself. Eat well. Ramen is very bad for you. If you don't take care of your body, you're not going to be around long enough for these for the fruits of your labor there. And Porter's just screaming bum gun over and over and over again. Make your own ramen. Maybe. I don't want to. You ever think of that? I don't want to. Who here has a 6-month runway of emergency funding saved up somewhere? Meaning you can offset 6 months of your expenses if you had to. Top, yes. Top, absolutely. Yes, in Thailand, okay. Okay. And I'm going to ask, who here has that amount of money in their portfolio? In Monopoly money? That's the best kind of money. I feel like we can I feel like we can make some deals. We're going to call up internet service provider and see what they accept. Or let me scratch that. Who here has lost that amount this year in the market? So if you calculated 6 months of your expenses, the essentials, right? And then you look at your losses for the year, how much of that adds up? And is it greater than the other number? Just curious. There's no wrong answer. I mean, we're all human, right? We all do stuff without making those kinds of correlations. But if your losses are greater than the fund that you don't have in place to cover yourself in the case of emergencies, it's worth at least considering like prioritizing that. So that way emergencies don't disrupt everything. Because if you disrupt this inflow, this whole thing comes crashing down unless you're already established, right? It could be anything. A tree branch can fall and just knock you on the head. You know, you can get disability. You can get workers' comp if it happens on the job. But, you know, if you don't have that padding, that money's got to come from somewhere. In a lot of cases, if insurance doesn't cover it and they're getting real stingy, you know, it's not worth it. So rather than relying on circumstance and potentially becoming a victim of it, we can take control of it and hedge against it, just like we do in the market. So it's everyone's decision. Everyone has to make their own decisions, but it's more financially responsible to have some sort of padding just in case something happens, in my opinion. You pay for health insurance, you pay for home and auto. That takes a lot of stress off of your shoulders in case something happens. But very few people have financial insurance in the form of just savings. And it's very hard to build that if you're living paycheck to paycheck and you're stressed out all the time and you're looking for extra money and trying to cover things, and it's all difficult. And that's where we really have to get visibility first. If you want to improve your finances, if you're struggling paycheck to paycheck, you have to get a map. Because then you can figure out what you can cut, what you can reduce, what you can expand, what you can roll into other stuff, for example. And then you can really, really hone in on it. And I'm not saying, 10 or 12 bucks here is going to make a huge difference. But there's, a couple $100 potentially that could make a difference. that's gas for the month. Maybe it's food for a week or two. It's maybe a health insurance payment or a car insurance payment that you don't have to worry about anymore. There's opportunities there to optimize, and then you can consider alternative sources of inflow without a huge time invest. You can tutor online. You can proofread online. There's a lot of stuff you can do at home with a very limited skill set. And most of us have the advantage of being a native English speaker, which increases our demand globally. And it's just a matter of finding ways to use that that don't extort, or that's not like a scam service or anything like that. So there's always something out there that you can do. Yeah, and all the while you're doing that, this tank will continue to roll forward and bulldoze everything in its path. And eventually this reinvestment wheel will outperform the consistent contributions that you're having to work hard for. And you have a limit to how much you can put in the market, but this has no limit. You can buy as many shares of a company as you want, as long as, if you got all of them, then you just buy the company, right? At that point, you're not listening to me. But this number gets really, really big in time, and it's surprisingly fast. You might think it might take like 5-10 years, but if you've got all three of these funneling into this portfolio value plus the annual tax one, this number gets pretty big pretty quick. Let's say what's 50 to 60% compounded 5 years in a row, just without a whole lot of effort. I'd say there's pretty good profit potential there. And if you spent the last 2 years maybe speculating and losing, 60, 70% each year, it's time to make a change, right? Or at least consider making a change. We can speculate on paper. We don't have to continue to dump paychecks into there and hope for the best. You can just put that same money here, and I'll teach you what to look out for and what to kind of, what things mean in these stocks, so you're not just buying stuff that other people say you should buy. I want to teach you how it all works and what to look for. And then you can make your own decisions, and we can review it as a community, and we can make decisions together. Sorry, I'm just peeking over at UOY and ZNB, but the light is like super bright. But I don't want you guys to just go on YouTube and just listen to what someone says. Like, that doesn't make sense. I want you guys here asking questions. I want you guys to learn stuff. I want you to know what earnings per share means. Basic versus diluted, for example. I want you to know what free cash flow means. I want you to know what the Sharpe ratio is. Like, there's all kinds of stuff that you just don't know. And I'd rather teach you what it is and how it all plays together so that you can do your own analysis and you can do your own research. And that's where also having someone that kind of bridges that technical ground with the kind of distilled process can really come in handy. And I'm going to put a link in here. This is not a sales pitch. I'm just putting it in here so everyone has access to it. This is Mad Maverick's coaching program. It is much more affordable than Premium. Premium is kind of an all-encompassing product. You get a coach as part of that, but coaching's it's $40. So basically, if you're going to lose $40 next month, it's worth at least checking out, in my opinion, right? So let me see. Top says, always prepare for the worst. So if I need quick money when I'm in some shit in a different country, I have my rescue, or I call you a Pookie. Absolutely. You always want to have a way out. Ideally, two. That way you're not pigeonholed into a bad scenario. Because remember, if you disrupt this inflow, all this goes down, right? You're going to have to potentially withdraw money from your investments. You're going to have to take out your speculative amount and slow the process down, and then dip in your investments that you wanted to hold for, maybe a year or two, maybe 5 years, maybe 10 years, because you really like the companies and you like those consistent dividends. And that means that since you're selling within a year, you have to pay a higher tax on the profit of those shares, because your short-term capital gains versus long-term capital gains rates are going to be different. And it's just a lot less efficient to have to do that. So rather than running into that scenario here, because this is going to slow down all the avenues of reinvestment here, all the streams of revenue that go into this portfolio, they're going to come screeching to a halt, because you're not going to have the speculation profits being reinvested. You're not going to have the dividends because you're selling all the shares to reinvest in the portfolio and buy more. And you're not going to get that sweet, sweet tax return because you had to cut it all right here because you weren't financially secure because you didn't want to sit down for an hour and make a budget on a spreadsheet. Like, that's the importance of what I'm trying to get through. And a lot of you guys already have budgets, and I'm kind of preaching to the choir here. But anyone that doesn't, like, this is your wake up call. Make a budget, get full visibility of your inflow and outflow, start building that credit score, do whatever you got to do to make sure make yourself secure and make sure that you have a much more efficient flow of money. And there's ways that we can leverage debt and all that good stuff. I'm kind of repeating myself here, but I want to really stress the importance of making sure that you're financially secure, because the sooner you can make consistent, clean contributions that you don't have to pull back out, earmarked money basically that you can afford to put into a portfolio, the better it's going to perform, because you're going to be able to make cleaner decisions with that money without having the extra pressure of having to become financially secure, sitting on top of that and influencing every decision you make. Okay. So with that said, I do got to jump off here. It is 11 o'clock and I'm late for a meeting. So let me end the live stream and recording. I'll hang out here in Discord for 2 seconds.